And so I would be surprised not to see six-figure Bitcoin over the next 18 months. Obviously, anything's possible, but I'm bullish on both gold and Bitcoin in that time frame.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. In today's video, Lyn Alden dives deep into the path forward for inflation, the US dollar, bonds, and what is fueling the gold and Bitcoin bull market. Lyn also shared her prediction for the Bitcoin network in the coming years. So without wasting any time, let's dive into the video.
So I think we're going to have higher highs and higher lows of inflation than we had in the prior decade. That's how I would describe a secular inflation. And, kind of a major thing I've been pointing out is, questions I got over the past couple years were, are they going to get inflation back down to 2%? And my answer has generally been, I don't know, but I don't think that's the right question. I think the right question is, what's going to happen with inflation the next time we have an upcycle in PMIs, for example, like Manufacturing Purchasing Managers Index, because I think that's the real test. You can get inflation down temporarily if you're willing to have a recession, if you're willing to disinflate enough, and that's kind of the pseudo cycle we've been on. It's obviously been offset by fiscal, as we've been talking about. So they've not gotten it down to 2%, but they have muted it significantly. We're starting to see early signs of PMI reacceleration, kind of rotation in what sectors are doing well. And so I think the big test is, if we get an upcycle in PMI, what does inflation do? My expectation is that inflation goes up or stays sticky when we get that next PMI rise. And so it's not a matter of, could they touch 2% sometime this decade? Sure. But the question is, can you sustain there and have another cycle of growth while still sustaining there? And I think that's the much harder thing. And so, because I think this is going to be a more energy intensive cycle, I think we're going to be more linked to what happens with energy than we have been in say the prior 10 years or so. And so I think my expectations, higher highs and higher lows compared to what we had in, say, the 2010s decade.
Bitcoin price plummeted over 8.4% on April 13 after Iran launched an attack on Israel, escalating geopolitical conflicts in the Middle East. The price of Bitcoin dropped from around $67,000 to $61,625, wiping out over $130 million in market capitalization within minutes following news of the attack. The sell-off is also affecting other cryptocurrencies. At the time of writing, Ether was down 9.81% to $2,927, while Solana sank 15.96% to $129. According to CoinMarketCap data, the global crypto market capitalization declined 8.19% to $2.23 trillion. According to Bloomberg, Iran launched drones toward Israel on Saturday, April 13. The action is retaliation for an attack conducted by Israel days before, which targeted a diplomatic compound in Damascus, Syria, killing 7 Iranians, including 2 generals. Aside from the airstrikes, Iranian authorities have reportedly seized a cargo ship owned by a billionaire Israeli. On April 12, United States President Joe Biden warned that Iran would launch attacks sooner than later, highlighting that the U.S. would help defend Israel. We are devoted to the defense of Israel. We will support Israel. We will help defend Israel, and Iran will not succeed. The conflict between Iran and Israel significantly escalates tensions in the region, something the U.S. has been reportedly trying to prevent since the October 7, 2023 terrorist attacks carried out by Hamas, which has led to broader ongoing conflict between Israel and Hamas. U.S. officials have been urging Israel not to escalate tensions in the response to Iran, a government source told CNN. The officials also expressed frustration with the lack of prior information Israel provided regarding its airstrike in Damascus. Israel only informed a U.S. official when its planes were already en route to Syria, sources said. We were not aware that Israel was going to carry out this airstrike in advance, the official stated. Minutes before it happened, and when Israeli planes were already in the air, Israel reached out to a U.S. official to say they were in the process of conducting a strike in Syria. It did not include any details on who they were targeting or where it would be conducted, and the strike was already underway before word could be passed through the U.S. government.
I think as long as so we've been in like a consolidating liquidity range for quite a while. My expectation is that over call it 18 months, we break out of that. Um, watching this kind of gold consolidation, it kept banging its head around the all-time highs of 2000 and change. My view was I don't know when it's going to break out, but once it breaks out, I think it's going to have legs to it. I think we're in the middle of that move now, and I think it's one of those things you don't want to overthink it. Like it can get near-term overbought, and people are gonna be like, it's going to correct, and it absolutely might. But it's been in a bear market since 2011. It's been in a consolidation for 3 years. I do expect a pretty significant run here. For Bitcoin, most of the indicators that I track point to being fairly mid-cycle in terms of the bull run. And so I still think the next 18 months look favorable for the asset. Again, it tracks global liquidity pretty well. The on-chain indicators can show us, for example, how much long-term holders are selling into the current strength. Because even though obviously Bitcoin supply is constrained, if the price goes up, 3x or 5x in a fairly short period of time, you generally see some of those older coins start to come to market and start meeting that new demand. And we've seen some of that, but so far we've seen less of that in this cycle than in prior cycles. And so I still think my expectation is there's room to run, both from the liquidity side being fairly constructive, so that should help demand. And I still think that there has to be a higher price to unlock some of these older coins to meet that demand. And so I would be surprised not to see 6-figure Bitcoin over the next 18 months. Obviously anything's possible, but I'm bullish on both gold and Bitcoin in that time frame. I think the funny thing is that because we're kind of largely in fiscal dominance now, I think that the emphasis on the Fed is in many cases backward looking. That the Fed has been a bigger source for markets for a long time. But as we kind of enter this fiscal dominant environment, I'm increasingly less interested in what the Fed does around the basis point margin, and more interested in what's happening with the treasury market, more interested in what's happening with the size of fiscal deficits, and those kind of more structural things. So to the extent that the Fed, cuts rates a little bit, or if they even add some interest rate hikes to it, it's not really the answer in my view. I think basically the large structural fiscal deficits are a bigger factor. And ironically, if they try to get down inflation by increasing interest rates, they're going to blow out the fiscal deficit even more. And so that's the lever that's different from the 70s, but closer to the 40s. And so for me, it's looking at, what are tax receipts going to be like? So for example, now because 2023 assets were pretty good, asset prices, we should expect decent tax receipts here, which ironically could narrow the deficit a little bit, which could give us, kind of a somewhat weaker performance in 2024 for at least some of these, say, mega cap assets.
BTC price action suffered into the weekend with a liquidation cascade, bringing BTC/UST below $65,300. At the same time, however, altcoins faced much worse conditions. Data shows many of the top 20 cryptocurrencies by market cap fell more than 15%. In so doing, altcoins relinquished crypto market share to Bitcoin, and the recent highs marked the most Bitcoin-heavy crypto market since April 2021. I don't typically look at Bitcoin dominance, but the chart is impressive considering the amount of new altcoins birthed into the market. Everyday popular trader and social media commentator Bagsy wrote in a response on X. Fellow trader Don Crypto Trades was among those noting the difference in drawdown between Bitcoin and altcoins in recent days. Yes, the actual hit on $BTC was very minimal, and the total downside also wasn't very relevant. He told X followers while discussing Bitcoin open interest. The real damage was done in the altcoin sector, which wiped out billions of open interest and made for wicks up to 50%. Historically, Bitcoin bull markets tend to see a dominance breakout in their early stages, with altcoins then catching up once BTC/UST sees a prolonged consolidation period. So far in 2024, altcoins, while performing well, have not witnessed such conditions for a meaningful length of time. Forecasting what might come next, however, fellow trader Mikeable Crypto argued that change would soon come. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.